you're watching the front page of the paper. If you look at the Wall Street Journal today, massive amount of cyber attacks being launched on Ukraine right now. They're all denial of service attacks. Denial of service attacks is like when someone hits your website with 15 million requests in an hour. They can do that because it doesn't cost them $1 a request or $10. So if you want to solve the problem of cybersecurity and make cyberspace safe for children, and if you want to eliminate hostile cyber attacks, and if you want to clean up Twitter and YouTube and stop con men and phishing and scamming, the simple solution is let someone get an orange check mark next to their name if they post $10 worth of Satoshis.
Bitcoin and other cryptocurrencies have swung wildly as Russian forces invaded Ukraine this week. As the financial markets reeled and cryptocurrencies tumbled, investors sought out safe haven assets. The Bitcoin price fell under $35,000 per Bitcoin this week before rebounding sharply. Ethereum and other major cryptocurrencies have been equally as volatile as extreme fear grips investors, and strategists said it could drop to $30,000 or below if the crisis worsens. That raised questions about Bitcoin's role as a haven asset, a resource for the unbanked, and an authority-free zone. Although some industry executives have questioned Bitcoin as being the digital gold amid a massive market crash, other experts continue to support the digital gold narrative for now, or until whale investors like MicroStrategy's Michael Saylor cash out. Hello and welcome to Money Talks. In today's video, Michael Saylor discusses the latest volatility in the crypto market, the impact of Russia-Ukraine conflict on Bitcoin, and how Bitcoin could prevent bots. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
I think that the volatility is driven by the immaturity of the asset class, and that means the lack of wash trading rules. You can buy it and sell it in the same hour and harvest a tax loss. I think that's fairly immature. I think 20x leverage on the offshore exchanges. I think the wild west of crypto derivatives. I think cross collateralization of altcoins into ETH, into Bitcoin through DeFi exchanges on a Saturday night, through a very thin piece of liquidity on the 177th biggest coin. All of those things are a recipe for volatility. And then the uncertainty about the regulatory environment, because as regulation comes, it has an impact on all these different crypto systems, and they're all cross-collateralized to each other. So I'd be surprised if there wasn't volatility. It comes with the territory. There are pros and cons. I think that the volatility will be damped as the regulation progresses, and that'll encourage institutional adoption.
Michael Saylor also compares Bitcoin to digital property and thinks that many people would prefer to have digital property rather than owning physical property. He also addresses the issue of crypto scams and what can be done to prevent them from happening.
I think if you look at it as digital property, it's pretty clear there are billions and billions of people that would rather own digital property than physical property. And I think that the most forward-thinking use case is Bitcoin is digital energy. If you go on Twitter, you find like in 1 hour, 500 Michael Saylor bots. They all get spun up. If you go on YouTube, there are about 500 to 1,000 Michael Saylor Bitcoin giveaway scams every week. We take them down every 15 minutes. The world, the cyberspace is beset by scammers, phishers, denial of service attacks, spammers, and it's never been worse. It's literally awful. And the reason it's awful is because no one's got any skin in the game. Or another way to say it is there's no conservation of energy in cyberspace. I can go into a hotel in the real world, post a credit card, smash up the hotel, and they charge me money. But what if I could go into every single hotel on Earth, in every hotel room in every hotel on Earth, using a Python script and smash them all up and not get charged any money, right? The entire world would come to a grinding halt. And so that's the status quo on Facebook and YouTube and Twitter and Office 365 right now.
In major news, the tally of cryptocurrency donations sent to Ukraine's government and NGOs since the start of its Russian invasion is nearing $10 million, including $1.86 million from one NFT. That total is rising rapidly as donations pour in for what's been dubbed the world's first crypto war. The government of Ukraine also tweeted from its official account on Saturday that it was now accepting cryptocurrency donations. Saylor clarifies that Bitcoin is not a currency and is best explained as a property. Saylor also made a tweet recently in which he addressed the Ukraine-Russia situation by saying that nation-state conflicts create uncertainty, constrain production, weaken currency, cripple trade, and undermine credit, making investments in debt and equity riskier and underscoring the benefit of converting treasury assets into pure digital energy. He also added that wars create inflation, cripple commerce, and make Bitcoin compelling.
Yeah, I think that Bitcoin is best thought of as property, not a currency. Currency is defined by a nation state, and unless the nation state allows you to transfer the asset tax-free, it'll never be a currency. They may allow you to transfer de minimis amounts, right? If they gave you a $600 carve out, which was what I saw in the last bill circulating around the Senate, it would work for small use cases, but it will never be a competitor to a currency. I think it's best thought of as property, and the same way that you have a second home for rental income. And if you had a home and then you went to Starbucks, you wouldn't try to break off a part of your house to pay for coffee. You would simply set up a credit line, a home equity line, or you put debt against your house. You would convert that into dollars, and then you would pay for your coffee with the dollars. In fact, it makes a lot more sense to use it as property than as a currency anyway, because if you had $1 million of Bitcoin and held it for the rest of your life, and then you borrowed against it, as long as you keep your expense ratio lower than the expected appreciation of the asset, you can do that forever, right? So it's just much wiser financial decision. Go short the currency, go long the property, and that's a time-tested investment strategy by pretty much every successful investor.
Despite the Bitcoin, Ethereum, and crypto recent price recovery, fears persist that the Bitcoin price could fall back again. The situation is still volatile, and the $40,000 levels are still the resistance. Unless Bitcoin meaningfully breaks this barrier, revisiting the range lows or even the $30,000, support is very much on the table in the short term. If the situation in Ukraine escalates, even more Bitcoin may fall below $30,000 as investors leave for defensive assets, as Russia could use cryptocurrency to circumvent sanctions. And that brings us to the end of today's video. What do you think about Bitcoin's current market performance? Will it crash once again or break the resistance levels to move higher? Tell us in the comments. Also, don't forget to like and subscribe. We'll see you soon with the next video. Thank you so much for watching.